How are we doing, everyone? Welcome back to the channel, and if you're new, welcome. So in this video today, we're going to be taking a look at how we can spot and identify reversing markets from an uptrend and then from a downtrend. And we're going to be basically using structure and price action to identify these reversing markets. So let's jump over to the charts. We're going to be taking a look at pound Australian dollar on the 30-minute time frame, and then we're going to be taking a look at gold spot USD on the 1 hour time frame. Okay, so taking a look at the charts on pound Australian dollar, first example being the uptrend, then we're going to take a look at the downtrend example, but the principles stay the exact same. So what you want to be doing is we want to be first identifying and marking our most previous or most recent structural high, this being this level here, okay, as this is an uptrend, this is a higher high, we then have a higher low. We then want to mark the previous higher low in the uptrend being this area here. So what we need to understand, okay, is if we're in an uptrend, what do we need to see? We need to simply be seeing new higher highs being made to continue looking for buys. If price is basically failing to make new highs in the uptrend, this can be a very strong confluence to us that we can potentially or could potentially be seeing a reversal in the market, but we don't just want to go off that confluence. We then want to break down the structure and identify confirmation candles that will indicate to us that the market has reversed or maybe reversing or pulling back from the uptrend. So let's take a look at a few of the candles. What we basically want to be seeing is we want to be seeing price breaking through this key level, breaking the previous high to basically continue looking for buy positions. But if we fail to see this, like I said, this is going to be an indication to us that we are potentially seeing a reversal in the market. So whatever market you're in, whatever pair you're trading, and if you see price pushing up, mark your previous highs, mark your previous higher lows where price has pulled back, and then it's the patience game. It's about waiting and waiting for price to basically give you a true directional bias. Because if price is going to continue pushing up, what we would see is price breaking previous highs, pulling back or whatever, and then we can look for the continuation. But like I said, if we are failing to see price make new highs, this is an indication to us that the price may be reversing or the market may be reversing. So let's take a look at a few of the candles, and what we can start to see now is that price is failing to make new highs, okay? What we can see is we can see this strong wick rejection to the upside where price has basically tried to push up but has been rejected. There's too many sellers in the market, and that maybe the buyers have now taken profit, the sellers are taking control, and the order flow and the balance of buyers to sellers is now switching to sellers. But more simpler than that is we are simply failing to see new highs being made. This previous high in the market is failing to be broken, and what we can now see is price is just ranging. We're simply going sideways, okay? So technically price is still bullish because we haven't broken the previous higher low. We haven't seen any candles closing below this high low, and that's a confirmation candle we need to look for. We can't just go off price failing to make new highs and straight away assume that price is going to continue down. What we need to see is we need to see price breaking and closing below the higher low to indicate to us that the sellers are now taking control of price and that we can now look for a short position. It says wait for the next candle and identify the confirmation candles, and this is exactly what we can see here. We have a key level here. This is a key level higher low or just a key level support, right? If price was going to continue up, it really is as simple as this. If price was going to continue up, we would see price breaking this previous higher high, and then we can look for long positions. But what have we seen? We've seen that price has created a strong wick rejection. We've failed to break the previous higher high, and what we can now see is that price has pushed and closed below the previous structural higher low or the structural key level support. And what we can do now is we can look for the entry, okay? And where are we going to be targeting? We're going to basically just be targeting recent structural highs, being this level down here. And then what we have for ourselves is a clear traffic to the left to potentially be filled, or for this imbalance to potentially be filled. So what we're doing now is we're taking the trade, okay? We're going to have our stop either above the key level as a less aggressive entry, but then what you've got to make sure is that you can still target your risk to reward ratios. What we're going to do here is we're going to have the stop just below the wick or slightly just above the candle close, and we're then going to target a 1 to 2 just targeting above this structural high, okay? So what have we done? We have marked our structural highs. We have then marked our structural lows. We have seen price failing to make new highs. We then see price consolidating. We then see directional bias. We have waited for the market to give us confluence or confirmation to where the price wants to go. This being this candle here, okay? We see that prices create that wick again, meaning rejecting any higher prices. We then have a close below the high low or the structural support, indicating strong bullish, strong bearish sentiment. And as you can see, we absolutely smash take profit, targeting the recent structural highs that we had down here. Okay, so like I said, the concepts stay the same throughout every single time frame, and also stay the same whether you're looking for a reversal from the downtrend to an uptrend or from the uptrend to a downtrend, okay? What we want to be doing is identifying in the downtrend and marking out our previous lower low, being this key level here, because this is the area we need to see price breaking to give us confirmation or to tell us that price is going to continue pushing down. Because if we're not seeing new lows in a downtrend, this will indicate to us strong bullish sentiment, okay? It really is as simple as that. It's simple structure and price action. What we then want to do is mark our previous lower highs in the downtrend, this being this area here, okay? Because what we have is we have a push phase, we then have an exhaustion, price made a lower high, we then have a push phase, breaking previous lower lows here, making a new lower low, this area then being what we need to see being broken to indicate that the sellers are still in control. So simply now we have a range. We're simply waiting for price to either break the previous lower highs to indicate bullish sentiment, or we're simply going to wait for price to break close below the recent lower low to indicate that the sellers are still in control. It's the exact same concepts as looking for sells when price is pushing up, but it's just in reverse. We're looking for price to break bearish structure, so we're just waiting. Forex really is just a waiting game and waiting to see the confirmation. And this is exactly what we can see here, right? We have a previous lower high in the market, bearish structure. We've got a lower low. Price is pushed up, broken previous lower highs. This then indicating strong bullish sentiment, because if price was going to continue down, it would continue pushing down. We would see price breaking the previous lows. But we don't just want to enter now. We want to make sure that we can see bullish confirmation candles and that this isn't just a fake out, grabbing liquidity, whatever you want to call it, and then going to continue pushing down. We want to make sure we see price holding at this key level and that we can see strong bullish candles. So let's wait for the confirmation and identify the candles we want to see to then take the entry. And this is exactly what we want to see. Again, I have picked these charts, but that's not the point. The point is, guys, you need to understand that these principles and these concepts stay the same throughout any financial instrument that you are trading, whether it be crypto, forex, stocks. Structure is structure, and if we're seeing structure being broken or we're failing to see new structure in a trending market, this can indicate to us a reversal. So what have we seen? We've marked out our previous lower high and we've marked out our previous lower low, okay? We even needed to see price break below this key level, like so. We could then look for a pullback and then we'd look for the continuation, okay? Or we're waiting for price to break above, which it has. We've then looked for the pullback and we then see our confirmation candles being this area here. These are our confirmation candles. Why? Because we see strong wick rejections, indicating that any lower prices are actually being rejected by the buyers. And then what else we can see is we can see strong bullish candles, and we can now take the trade. Because if price was going to continue pushing down, what we would see is we'd see price making new lower lows. But we haven't seen that. We've failed to see price make new lower lows. We've then broken previous bearish structure. We've created higher highs, new higher lows as part of bullish structure. We've seen our confirmation candles, this being this area here. We can then take the trade, targeting recent structural highs or recent structure in this market, being this area here. And we've absolutely smashed take profit. Hope you guys enjoyed this one. There's a lot of value in this video, so if you do need to watch it, feel free to rewatch it. But make sure you guys leave a thumbs up, leave a comment for me so that I know you guys are enjoying this. But I hope you guys have had a good week. If you haven't had the best week, just remain focused on the process. Don't get down about it. Understand and be consistent, and just take a look at where you've been failing. Take a look at what you've been doing wrong and just improve on it. But the most importantly, just never ever give up. So hope you guys have a good weekend, and I'll see you lot in the next one.